Hey everybody, welcome to another edition of Tuesday Talks with Ashley Hanna and Angelo Datseris, your Charlotte metro area real estate duo. Me on all your real estate sides, whether you're buying a home, selling a home, looking for investment properties, looking for vacant land, and Angelo Datseris with all things money and that relating to your home. So today we have a great episode planned out for you today, and as always, please feel free to drop your questions below and we will try our best to get to them. Live talk today. Hang on one second while we get Angelo teed up. Hey.
Hey, what's up, Ash? How are you?
I'm good. How are you?
Good. Crazy as usual.
Yes. Yes.
So we got a good couple little good nuggets we're going to talk about today, right?
Yeah. I think we should jump right in it.
All right. So I know we talked a little bit last week about lumber prices and all that, right? And then we're going to kind of talk about builders and stuff like that. What are lumber prices doing this week? Did you pull them numbers?
Yep. So this week is good news for new construction, home buyers, builders. Lumber prices have ticked down. So today, or as of yesterday at close of business, they were $1,103.40. So that's down about $200 from last week. Last week it was at $1,302. So this week we're at $1,103. So that's good news.
Interesting. Yeah, that's good news for sure.
I'd be interested to know kind of like, because I feel like in a week, that's a pretty intense drop, right?
Yeah.
I mean, I'm not an expert on commodities and things like this, but I would just be interested to know kind of what drives those inclines that we're seeing, and sometimes really steep.
Yeah, right. I think, no, I can't say for certain, but I think because like the war, what's going on in Russia, that's got a lot to do with that, because as of yesterday, they talked about, it was kind of brutal in the bond market yesterday because they talked about, potential talks about peace talks with, the Russian-Ukraine thing and that kind of settling off. And so maybe lack of fear that could potentially drive that. That could potentially be, I don't know for certain, but, I see that really kind of makes it kind of weighs heavily on the bond market. And now oil prices, as of this morning and today, we're dropping back down oil wise. So, could fear and speculation, right, drive the market. So, now that we hopefully maybe see a light at the end of the tunnel, maybe that's why maybe we're seeing some of these, the tightening loosen.
Okay, that's a good point. I didn't even think about that. Whenever there's a loosening of, things are becoming more clear, therefore there's less fear.
Right. They kind of start to loosen up on, on that. So I think that, with some of the stuff that I was reading yesterday in the bond market, that was, that was really the only, the only factor which caused, the bond market, it was really bad in the bond market yesterday. The 3.5 coupon lost about 77 basis points in one day.
That mean? What does that mean? What you're saying?
Probably about 0.25% to interest rates in a day. And this is,
in
I've been
in
a day. I've been doing this, 20 going on 20 years now, right? So, and I have never in my life seen so much volatility up, down from day to day, like major swings in the market.
Like here recently?
Correct. Like here recently. It's just, it's just insanity. It's to the point now with the clients that I have kind of in the pipeline looking, I'm starting to, put them on like a lock and shop type program that I have, and I don't really offer it that much because it's not, I don't think it's that, it's, and it's somewhat normal market. You don't really need that, but now it's to the point where these swings are so severe where, right now 4.5, you know, you were looking at a 4, you know, 4.34 for like a 4.5 interest rate on a 30-year fix. Great credit, 30-year, you know, 30-year fix. So, you know, at the end of December, at the end of last year, I mean, we were still 2.99. You know what I'm saying? And we're at like four, anywhere from 4.25 to 4.5 right now on a 30 fixed. Investors are at 5 1/8, 5 1/4. So, you know, the speed, I guess the abruptness of how it came from, you know, from where we were just a few months ago to here. Like I just have never seen it, you know, react so violently and so quickly. You know, and so it's just uncertainty. So I figure with this program, just lock them in, and then, you know, if we can float it down to, if they take a turn for the better, then we can float it down. So,
and I feel like, Angelo, so with the typical home buyer, you know, well, we're just going to be very vanilla when describing this situation. They go under contract. It's a 30-day close, right, from the moment they go under contract. In that situation, when do you say I go under contract tomorrow? What are you going to recommend to this buyer?
lock.
As far as lock, really?
Yeah, lock.
You don't think
100%.
It'll be different in like a week or 2 weeks?
With everything that I'm seeing with the market, you know, the reporting that I have, that I follow, that I watch every day, is the bias is lock. Do not, yeah. I mean, if you're within, I mean, it's lock. I mean, right now my lock/float consideration says, with yields and rates skyrocketing as a no-win situation that continues to play out for the bond market, floating cannot be endorsed in the midst of the current trend. And so it's a lock. A lock recommendation is lock. Now, you know, sometimes when you have such a volatile increase, you know, for about 5 or 6 days, you then see it start to kind of trickle down. But I mean, we're in the midst of some crazy inflation, right? We're in war, you know, and this is just things that we've really never seen. I've never seen in a war. You know, we just came out of a pandemic, now we're into a war, you know, and then we have this inflation, you know, and then the FOMC meets, if the Feds meet tomorrow, which they're going to increase the federal funds rate by 1/4. Now, everyone thinks, I know we kind of got off on a tangent here, but everyone thinks by, oh, the Feds are raising interest rates. Everyone thinks that correlates to long-term mortgages. It's got zero to do with long-term mortgages. That's for short-term loans. And what the Fed funds rate is basically the rate at which banks lend to each other for overnight loans. Okay. So very short-term loans. So usually, I mean, and we kind of already have this. They've known that this rate hike is coming, so it's already kind of built into the market. So we're not going to really see much tomorrow when they announce this. Yeah, we're not going to see much of a reaction, if anything, you know, because I think just because there was so much damage that was done yesterday, there's really nowhere else, you know, we get. So if this continues, I do think that they're going to have to step in to do something to I do 100%. You know, because it just broke basically a 10-year yield broke the 2% yield, the 2% yield, which is was a level of support. And so now the 10-year yield is at 2.1, it's 2.142. So it's over 2% yield, which, you know, and now it's kind of heading towards the next level of support, or ceiling, what they call it. And once they break those like ceilings, it's called a floor and a ceiling, right? And so there's a floor support and a ceiling. So the ceiling, it's kind of that, all right, if it gets here, then it's going to go here, right? And so the same thing when it drops. If it breaks that level of, you know, for the floor, then it's going to, you know, once it breaks that floor, then it's kind of going to drop a little bit more. So we've kind of broke that ceiling, and it's, you know, it's hard to say for certain where it's going to go, but I would recommend, honestly, I'd recommend locking. You know, if you're within 30, 45 days, just lock it. And
Yeah.
just why, I mean, because you could have another day like yesterday where, you know, you lose, you know, an eighth to a quarter% in one day. So, you know, and so, you know, when you see, I mean, and it's, my phones are going to be ringing, you know, and I'm probably going to do an Instagram story making fun of the media and people freaking out when the Fed funds, when they raise their interest rate a quarter%, because it's really got nothing to do with long-term, you know, securities, you know, more 30-year fixed, 20 years like that, right? That's like more short-term HELOC, your HELOC rates, your CD rates,
Right.
you know, your car loans and stuff like that, more your short-term stuff that's going to impact most.
Okay. So I'm going to make a note of that to add to our notes for the show.
Okay.
You know, just because the Fed is going to announce most likely tomorrow that they're going to be raising the rates, it does not correlate to a typical 30-year fixed mortgage.
Correct.
Um,
And typically too, when they do like hike it, you'll see like an uptick, you know, but then it, honestly, I've been following this for years. It's a little uptick and then you'll see it kind of trickle back down. Yeah.
Yeah.
So, but you're not going to, so like what people think, oh, rates went up a quarter%. That's what people think. Oh, went from a 4 to a 4.25. That does not mean that at all.
Right.
I mean, what we had happen yesterday, that's what caused rates to go a quarter% was, you know, I mean, we were pricing off you know, I'm kind of really talking like mortgage-backed security lingo here to you. Like we price off of certain coupons, which is mortgage-backed security coupons, right? We were pricing off the 3% coupon until at the end of this week, and that's gone. We're not pricing off that 3.5% coupon. We're pricing off the 3.5% coupon, which basically is like the next level up for interest rates, if that makes any sense.
Yeah.
So, anyways, I could go on a soapbox about that.
I mean, I'm just grateful that, you know, because it is really complicated and it's super important that you are working with somebody who not only understands the markets like you do, Angelo, but also has a history to go off of, right? That informs your opinion today on what to look out for in key indicators. That's what I was talking to someone the other day and I was like, I forget the question they asked me. And immediately I'm like, okay, well, that's a question for Angelo. Like, I don't even, you know, I rely so much on what your knowledge, and it's such a great resource for anyone who has questions.
And it's still, thank you. I mean, that means the world to me. I'd like to think that I know somewhat. I mean, probably enough to be dangerous with it, right? But there's still so much I probably don't know with like deep dive with it. But yeah, I just got another alert right now. I mean, it's just lock.
So like typically too, don't you like, I feel like you said one time that you usually like, or I guess it's reprices. You get 2 reprices a day, or
depending on the volatility of the market. You know, I've seen as many as like 4 to 5 reprices, and like I'm talking up and down. Like lately, I've seen up and down.
Right.
You know, 2 up, 3 down, 3 up, 3 down, 2 up. You know, it's like what?
And that just makes your blood pressure.
Yeah, it really. Just the other week, you know, I had quoted. I was, you know, pricing up against an online competitor, right? And I quoted a 4.016 in the morning. By that evening, it was 3.840. So it dropped, and that was like another crazy volatile day.
Yeah.
Right.
Yeah.
And then the next day, it was a complete reversal, and we were back at 4. So it's like, man, you just can't. Yeah, it's like my quotes that I send in the morning are not valid in the afternoon.
Right.
So it's important, you know, to know that, hey man, if you like what you got and you know, you're okay, take rate out of it. And that's what I want to talk. Everyone wants to think rate. Of course we all want the lowest rate. You know, look, it's about your payment. Are you comfortable with that payment? Are you good? Then lock it and let's move on. You know, don't worry about that, because you're safeguarded from crazy interest rates. And you know, guess what? If rates drop 1% in the next 6 months to a year, then we'll refinance you out of that and get you a lower rate. Don't worry about it.
That's
So,
right.
because you're not going to want to refinance up, right? Nobody refinances to get a higher interest rate.
Yeah.
So
you're probably not doing very many refinances right now.
I mean, I'm doing some cash outs. Yeah, like investment property cash outs, people looking to purchase new properties and things like that, kind of all over. Investment, it's crazy though. I mean, there's so much equity, so much equity in houses right now. People are kind of taking advantage of it, tapping in.
Like speaking of equity, the February market stats came out from the Charlotte multiple listing services Canopy, and the average sales price as of the end of February this year was $407,812. That's the average sales price. A year ago, it was $341. So that's up 19.6%.
It's not laughable. I mean, it's laughable because it's like holy poop. That's
right.
a lot.
It's laughable if like you bought a house last year and you want to sell this year. I mean, you're just like, okay, yeah, 20% instant equity. That's
right.
I just thought that was interesting. And, the thing that's driving this is supply, right? Because the inventory of homes a year ago, we were at just over 4,200. The inventory of homes on the that we have on the market today is just over 2,200. So, I mean, that's almost half.
Yeah.
We're down year over year. So that's why we're seeing those crazy average sales price year over year increases.
Right.
Which kind of leads us into our talk about new
construction.
So here's what personally I found. Did some research. Some builders have included in their sale, because every new construction home builder uses their own offer to purchase and contract.
Yeah.
Which is a whole nother layer of wow. Just know.
A whole nother layer of wow.
Yeah. Just know that those contracts are designed by attorneys to benefit the builders.
Wait,
so keep that.
They're going to benefit the builder? No.
Isn't that crazy? So
that's why they don't use the NC contract, because that safeguards the buyers, and sellers. So
field.
Correct. So take note with what Ashley's talking about now, because that's important stuff.
Yeah. And I always tell my clients that, because they're like, well, what, they try to give me what if scenarios. Now, I'm not an attorney. I don't practice law. I can't interpret contracts in that way. However, I can tell you my thoughts on it and what I would do, and what I've seen. So one thing to be aware of in these new builder contracts is price escalation clauses. So that means it'll be a clause somewhere buried in the contract, usually, that says they can increase the sales price. So when you sign a contract with a builder, essentially in your mind, you're probably thinking, okay, great, I'm locking in my rate. I'm locking in my sales price. Most of the time that doesn't include upgrades, but you keep that in mind, right? Well, if they have this escalation clause in there, that means that the builder can increase that base price and blame it on the cost of materials. Like we were saying, lumber prices last week were at $1,300. This week they're at $1,100. So, I don't know what that would correlate to as far as a price increase for a new construction home builder, but it's just something to be aware of.
Let me ask you this. Do you think they would drop their price?
That's so cute. That's cute. Yeah.
So no, they'll only raise their price, but if prices come back down, they won't drop it. Oh, that's cool. That's awesome.
Yeah, it's great.
Awesome.
And the other thing is that a lot of times these builder sales reps use this tactic, which I don't like, but because we are in the market that we're in, they're able to do this, and it's like a fear tactic. Because if you don't like that they're going to do a price increase on you, they just say, well, we have 5 other people lined up right behind you that are willing, and they can sell it for higher. So they have no incentive to help you at all. They don't care if you're upset about it. They don't care if you don't think it's right. They don't care. So if you are signing a new construction offer to purchase and contract, see if that contract, make sure that you understand, does that contract have a price escalation clause in it? What does that price escalation clause mean? And when does it kick in?
That is so important, man. I'm probably gonna do some Friday facts about this. I'll get some notes after this, but yeah, I'll probably do some Friday. This is crazy.
Yeah.
This is good info.
And you know, a lot of times these new construction home builder contracts are 19 plus pages, and it sucks. You know, I read through all of my new construction offer to purchase and contracts. I read through them. Does it mean that I necessarily understand everything? No, but I try to take out what I don't understand, ask an attorney, see what my clients, if they read it. I encourage my clients to read it as well. I know that it's like a huge pain in the ass, but you just want to make sure that there's nothing buried in there. Some other things to be aware of is, I was reading some blogs about it. You know, another thing to look out for is build time. So you were telling me, and I've never seen this, about a new construction home builder that had a 2-year timeline for the build time.
2 years.
I mean, that is insane. So right now, I'm finding that builders they're not including in the offer to purchase and contract. They're not including like estimated settlement date. You can ask the new builder representative what the estimated close date would be. But like for me personally, we signed the contract the first week in January. It was estimated the home to be done in September, October. Now, I mean, the last time I talked to him, which was like a couple weeks ago, he was saying November. So, you know, it's really hard to pin down an estimated closing date. And I know that's really hard for people to wrap their minds around, because you're trying to plan, right? You have people moving here from out of state. You have people looking to sell their homes. It's just something that you have to stay close to. And yes, you know that there are supply challenges in the marketplace, right? Cabinets, paint, windows. I mean, all of it. It's all taking longer than expected. So you can only control what you can control. And that's what I tell my clients. I'm like, it's not in here. You know, what is a reasonable timeline? I mean, in my opinion, 2 years is absolutely absurd.
Right.
Like, I mean, I think a year. I think for most builders, like, they have a year target as like being the most, because they don't want to hold on to that contract that's honestly losing money for them by the day, because home prices are increasing so much.
Right.
Like we just talked about, year over year price increases. So, you know, after a year, that builder, if they haven't built, they've essentially lost. Like, they could sell that exact same property for 20% more, but they haven't, right?
Sure.
So, you know.
Question about the escalation clause. Do they have, and I'm sure there's, you know, a wide variety of escalation clauses that builders put in here, right? Do they have like a range, or is it open-ended and saying, well, we can just charge whatever the hell we want, you know, and after 6 months, if prices go up, we're going to charge an additional $60K, and if you don't like it, kick rocks. I mean, do they have, because it's their contract, do they give themselves a range? Is there, you know what I'm saying? Have you seen any of that in And the stuff you've looked up?
Some, I mean, I think it really depends, honestly. Most of the time, I think that it's just a disclaimer because, like in this one blog that I was reading, um, like the cost of the home, like the cost to build the home had increased 16.4% over the course of a year. So, like a year ago, they couldn't predict that, right? They couldn't predict that price increase. So, you know, like they just said, beware of escalation clauses. And I'm trying to remember back, like even a year ago, because right now I'm under contract with one builder. I have 3 contracts with one builder. So I know I know with theirs, there isn't an escalation clause in there. But, and you know, I closed a townhouse earlier this year and there wasn't an escalation clause in there that I can remember. I feel like you're going to have to really be careful with like the really large national home builders, the Pulte's, the MI, the Mattamy, the Taylor Morrison. Those, your real estate agent should be talking to an attorney, I think, just to make sure you're protected and that you as a buyer understand all the risks that could happen during the course of a year, or in that one client's case, Angela, the course of 2 years. Because that is like 2 years, a lot can happen.
Right.
So things to be aware of.
Gotcha. Wow. I mean, yeah, you gotta, yeah, those contracts, you're right. I mean, there's so much legalese in there, right?
Yeah.
There is a lot to read through those contracts. I mean, they're daunting. I mean, the North Carolina state contract is, you know, got a lot of stuff in it, but those builder contracts, there is so much, because I've seen countless of them, and it's like, God,
Yeah.
you know, what's in here that, you know, that to the naked eye, what they're throwing in there to kind of hook you in where you can't get out, you know what I'm saying? So yeah, that's great information, Ashley. Like that's just nuts. Information that's priceless when you're looking at these new construction properties, how they potentially hook you. You know, they don't mean to do it, right? But I think they're taking advantage of possibly, you know, they're kind of taking advantage of the situation, the current market conditions that we're in. You know, they're, you know, capitalizing on that.
Well, and I always say, like, the builder is the seller. Like in a normal real estate transaction, you have a buyer and you have a seller, and that seller and everyone that works for that seller, all the, you know, this from the salesperson that's in the sales office all the way down to, you know, the contractors that they use, they are going to protect that seller and their money. That is their job. Their job is not to, they don't give a flip about the buyer. And I always try to tell people that. Just have that mindset, because it'll make you, I think, more aware of what you're getting into and understanding what, like, more aware to look for things.
Right. Yeah. Wow. Wow. Yeah. Good stuff today, man.
Yep.
A lot to chew on. Let's see. Yeah. We'll see what kind of happens with, you know, with the Fed's meeting this week, and I kind of have a feeling I can kind of see what's getting ready to play out. But you know, I think it's already kind of priced in the market. And I mean, if you got a new build or something, get with. I would not personally. I wouldn't just go to a builder's sales agent. I would bring a realtor in 1,000%. You know, yeah. So if you have any questions about this, you know, use Ashley as a resource. Even if it's, you know, I like, you know, you're a wealth of information. I'm sure if somebody needed help, if they're already kind of working with somebody, you'll just, you know, I'm sure you'll just give them, you know, your opinion on it. Same with me. If you're working with somebody, we don't care, you know,
Right.
you know, just ask us for your opinion if you got any questions, financing wise, you know, new purchase wise, new builds, you know, reach out to us and we'll try to get to the best possible answer as possible. So, yeah, so this is a great talk, man. We'll think about some good stuff for next week for everybody. Thanks everybody for joining. Miss Jones Journey, I see CS Piker, a lot of people over here, Agent Gretchen. I'm not sure if she's still on here now, but yeah, thanks for joining. If you like us, please tell your friends about us, like us, comment, follow, share. You know, we have a couple different channels. Ashley's all over social. We're all over social. So let us know if you got any questions. We're here to help.
Thanks, everybody.
All right. Take care. Bye.
Bye.